I'd like to call maximizing for our panel, maximizing
notre modératrice, Murielle Wuidar,
Murielle Wuidar. So, maximizing, unlocking value for money opportunities in insurance distribution for enhanced customer satisfaction. Murielle Wuidar, Emmanuel, Roque, manager of trade development by Sogelife, Silvia, Bracaloni. Her microphone doesn't work.
Frédéric Driant, aide IF1, donc c'est investment.
Silvia Bracaloni, Director of Regulatory Affairs with Lombard International Assurance. Frédéric Driant, Head of IFA at Bill.
Carlos Montalvo,
Nora Toutaoui, Head of Pricing Analytics Non-Life at Baloise. Carlos Montalvo, PwC Partner Global Insurance Regulatory Leader, and Cédric Cahuzac, Head of P&C Commercial Lines at APCAL Luxembourg. Murielle, you have the floor.
Là, ça a l'air de fonctionner. Bien voilà, enchantée déjà d'avoir une salle aussi remplie pour ce panel.
Thank you very much, and very happy to see you so numerous here. I think you've introduced more, much better than anyone the round table topic of today, which is value for money. Our idea is to go through the journey of a product from its design to the client satisfaction through the assessment of cost, coherence, etc. I'd like to give the floor first to Carlos, who is the regulatory expert, who will explain us how we've reached this concept of value for money. Carlos, how did we get there?
And Carlos will speak in English, so for the ones who would like to have it in French, we have translators. On a les traducteurs là quelque part, les micros et les casques.
Thank you very much, Murielle, and thank you to APCAL for the invitation. My apologies for speaking in English. En français, on dit que...
Because in French, we used to say that some people do speak French and do speak very bad French, so I prefer to speak English, not to have you suffer.
Let me start with Lord Byron, romantic poet who wrote in English, even if I'm Spaniard. And he used to say that the best of the prophets for the future is the past. Now let's try to see where do we come from, because it may give us some indications of the direction of journey. And when it comes to value for money, the concept is relatively new. It was invented and trademarked by EIOPA only a couple of years ago. But the underlying idea has been there forever. I am myself a consultant, and I give advice to people, and people pay me for that advice. It's exactly the same as you, as brokers, are doing. If my advice is not good, I will be out of business. So, new concept, old principle. And an old principle which, by the way, should be embedded in everything that we are doing. In IDD, we didn't have such an idea. We brought in broader concepts like best interests of the client, the idea of fair information, etc., etc. I say we because on those days I was myself involved on the regulatory front. So my apologies for everything that we got wrong, and hopefully what we got right is helping you moving forward. But there's something interesting that I wanted to bring in terms of what we were discussing or where we ended on IDD. And IDD was, let's say, published in 2016, not so long ago. When it came to advice sale, they could be allowed where the advice could be non-detrimental. Now, anyone in this room would hire me as a consultant if I could tell you I'm going to advise you and my advice will be just non-detrimental to you? Please be aware that sooner rather than later, non-detrimental will not be sufficient, and it sends the wrong message. We are here because we are going to help you and we are going to make a difference. Isn't this what money, value for money, is all about? Then we move into the POC delegated regulation, and we started using the expression of fairness testing and so on and so forth, but still not many references to value for money. What was interesting is, and this is an APCAL day, so product distribution arrangements stemming from IDD are among the most important things in terms of your relationship with the manufacturer to make sure that indeed you are in a position to provide value to your clients, that they said, let me read it because this is a quoting, that product distribution arrangements should ensure that objectives, interests, and characteristics of customers would be taken into account. This is also one of the underlying points of value for money. In the UK, and they seem to be always, let's say, or they claim they are more advanced than we are here in Europe, they didn't have that concept, but they were using the expression fair value, which, by the way, is also part of the so-called consumer duty that so much noise is doing. Finally, back in 2021-2022, EIOPA came with the idea of value for money. Let me also be a little bit candid here, because what you saw in this underlying idea is that there had to be proportionality between the benefits on the one side and the costs on the other. I think that we are missing an important dimension there, which is the risk underlying, particularly for life products. If you ignore that out of the question, I don't think we are going to be getting it right. And last but not least, we mentioned past, present, future. There is ongoing discussions around bringing the concept of value for money forward on the basis of the retail investor strategy that everybody talks about. 2 points there. The first one, and it's again a little bit of a provocation, for a change, we insurance people are exporting a concept to the MiFID world and the MiFID people. Is this going to be the new normal? I don't think so, but I think it's fair to wish for it. The second one is that value for money is going to be linked to something called benchmarks. We are going to start in life. It may very well be that it extends to risk because it is tempting, it seems easy. Is it really the solution? And I think that's probably also a question that I drop to the whole audience. Is this what we need? Will it put the focus only on price rather than on service? I think that's a fair question. And with this, knowing where we are coming from, where we are heading towards, I think that I give back, let's say, some food for thought to all of you. Thank you.
Thank you, Carlos. Merci. Gracias. Non, ça c'est en... Non, c'est en espagnol. Voilà, donc Carlos le mentionnait juste avant.
So Carlos mentioned just before, the client orientation is the heart, is the core business of the insurers. It's helping the customer find the adequate product. To my left is Emmanuel, our expert in life insurance by Sogelife. He will explain how the client is at the center of our concern when we receive a product, when we try to think about a product which you're going to propose to the customer. Thank you very much. It's my pleasure to take the floor here. What I wanted to tell you is that if we speak about value for money in Luxembourg, we should not be ashamed of it. Value for money is pretty much frequent. And we have no other choice because we have some customers which are quite advanced, very demanding. The size of an average ticket in Luxembourg comes from advised clients that are called high, ultra-individual clients, highly advised people, and they want value for money, and it's normal. It does have an impact on our business model. Our captive networks of distribution exist very rarely in Luxembourg. We've got an open, even super open architecture. I come from a banking group. Sogelife generates 20% of its activity with this group, and even for that activity, it does it with independent actors because these brokers are brokers from the Société Générale, but they are self-employed brokers. They are present everywhere. So it's a question of survival for our activity and for theirs. So we're obliged to be present everywhere. Historically, we've been very good because we've always worked with the private banking world in Europe, and we've been building products with them, very wide projects which allowed us to do many things, maybe a little bit less than our competitors from neighboring countries. From France, French people have got more and more sophisticated products. The UK also does cross-retail products. I'm speaking about underlying assets. The interest of the customer is to have a wide variety of these products. We do everything in Luxembourg. We do these products well. We turn from simple products to hedge funds, private equity, via bond management, etc. Everything has been existing for a while, and all these opportunities are present in Luxembourg with a framework, because the customer is not on his own. We can do guided management or feed for discretionary management. We can also leave the freedom to the client with FAS or advised FAS, which will allow the customer to turn to other instruments, other vehicles. So we're customer-oriented. The customer is at the heart of these products, and it has a great deal of possibilities. If we speak about a product, for a long time, Luxembourg has proposed products which were not proposed by French insurers, for example, private equity funds. And finally, we started to think that the customer will also have a customer protection data or concept. Maybe our customer could turn to other products which do not correspond to him completely. Without turning to new regulations, which we're going to mention this afternoon, our Luxembourg regulatory framework is very adequate. We have long-dated clients who have to diversify their activities. We also, as insurers, have to inform our clients, our customers. We're not speaking of the Circular 53 or of the 081 reinforced for risky products, for example, such as hedge funds. As a matter of fact, we have very nice products for this type of customers, trying to ensure to avoid accidents or incidents. What happens with these new regulations? It's a kind of something formal. We have to demonstrate what has been done, what has been said. And to come back to Murielle's question as far as the product design is concerned, it has also entailed slight changes. Luxembourgish insurers are not at ease to speak about project or product design, and IDD is quite recent. The products conceived or designed today have been designed before the IDD. I was referring later on to the 15.3 of 21. I can give you the example of a product which was launched recently, and Marc Lauas has mentioned the ISR Lux Flag label, and Sogelife had one of the first labeled product, Lux Flag, 2 years ago. We formalize, we standardize this product, we co-design this product with other competitors or other brokers. We made an opinion poll, we asked different people about the target market, and I don't know whether we really tested the marketing such as IDD says it. We did it with our distributors, and finally this design phase became a co-design phase with them and with their customers. That's what has changed since the beginning.
Puisqu'on parlait juste il y a quelques secondes d'IDD, de réglementation,
talking about the IDD regulations, now Silvia, within the framework of this aspect, are there elements in the regulations where we say, well, the kind of blind spot, we don't really know where we are aiming at, or or there are sometimes maybe other avenues, or what is the situation? Well, when we met to talk about about this roundtable, and we're talking about a vacuum in regulatory vacuum. And I wondered, I mean, can we speak about regulatory vacuum? Because value for money is a notion which today, this notion, as Carlo anticipated, I mean, this value for money is not standardized, and it will only be standardized when the investment retail strategy then will approve the concept. So what is sure is that when the entry in force of the IDD and associated regulations, the value for money then was evoked in a rather blurred way, just like a balance between a cost and a return on contracts or on the arbitration, for example. So between cost and return regarding the various sub-activities. And so later on, we were in the possibility of defining this value for money concept. So from the second semester, 2020, there was the pandemic, then triggered the necessity of liquidity, and which make the European authority proceed with the anticipated purchasing. And so with the possible mismatch between the expected return and real return at the purchasing moment. So the strong potential with the contracts for positive return then was designed in such a way that the European authority then gave some orientations to the authorities to help them, to support them, to guide them in their daily job, and so assess whether a product was designed for a balanced return for the traders who decided to take them. And so now, with the supervisor state in autumn 2021, and then with the access value for money in next autumn, now reading these two documents, actually, to me, I mean, the insurance company can draw some elements and useful elements in order to integrate their product oversight governance, and so to bring a substance to their calculation systems, which we understand because these calculation procedures are rather complex, because we have to take into account several factors, among others, the expected return from the contract, the expected return from underlying contract, but also the total expenditures rate, with the interest also, indirect costs also, the future regarding the investment contracts, but also the risk profile. Now, in this exercise, what we call the contractual reciprocity, the insurance company can translate into a monetary aspect all the services they offer to the customer, digitalization, for example, this kind of services, tailor-made services, flexibility of investment, insurance coverage, etc., etc. But also they can bring to the contracts or on the contracts, they can sort of echo the various costs on the various contracts. And to speak about the cost of the brand, of the marketing aspect. So we have a list of elements to take into consideration. And so taking this into consideration, I think the exercise is not yet mastered in Luxembourg with the multi-option product. which sees a kind of open architecture structuring and free payment of premium. These are two factors which impact the calculation system. Well, hopefully, I mean, our products in Luxembourg products do match the various areas of regulation we have now, but somehow, somewhere, I mean, we have to show that we bring an added value, create added value for our customer. And so, close to me is Cédric from APCAL. Now, what about you? I mean, how do you create value for a customer in an insurance contract? Well, the non-life insurance product in Luxembourg over the 20 years evolved quite a lot. I mean, they are quite complete. Now, it's difficult to add value, and it's not because it's difficult to add value that they cannot add value anymore. Now, in order to do so, then we use a very simple means. First of all, we go and see the intermediaries, and we ask them, and you're well aware of that. I mean, what are the positive and negative side of our product? How our clients are going to meet their expectations? Are their needs being filled through our products? And then next, I mean, we're going to look at the people who have the on-site expertise. So the expert damage, for example, is going to see the situation. We are going to see all the experts in the various jobs and dealing with the client relations also. And then we have the feedbacks, and with the feedback, we see where we are, if we are not lost, if we are matching the expectations, or and then something which is interesting. Then we look at the competition, and so a kind of market and see watch. We see what's happening on the market, on the international and national platform. At AXA, we are a big group, and so we have figures. So we have on what's happening abroad, and also, last but not least, I mean, you have a satisfactory service with our customers, and we see what they say regarding our service. And so, how do you measure, concretely speaking? I mean, in terms of satisfaction, what do you measure? I mean, comments, or what do you measure? I mean, does it go beyond that? Yes, I mean, it goes beyond this. We have a promoter score form, and you have specific questions regarding quality of service, for example, the range of the warranty, or what is the experience following a damage. And so once we have the experience following a damage, then I think that the comment is to be taken into consideration, because then we'll see whether we are reactive or not. And next to this net promoter score and the client survey, there are some other factors also which may be useful. Retention rate, for example, the more we keep our customers, it means that we are meeting the expectations, and or at least, I mean, they do not find elsewhere. And also regarding the damages, I mean, depending on the way we consider the damage, then we are in line or not with the expectations of the customer. And we train our people also, and the way we train them, they are able to offer a quality service. That's it. And so, which is quite interesting. But there are some other insurance also willing to add up to this. And so, Emmanuel, there's maybe a point you're measuring and controlling. The best satisfactory in direct factor is the complementary aspect, and a premium actually they are being paid, and we reach about 35–40% of their premium, and then also the claim rate as well, which have to be taken into account. I mean, claim, the true one, and the other one, I mean, the dissatisfaction of the customer, of a client moving through, going through a broker, and then we discuss about it. And so true claims, I mean, there are very few of them. So from the mediation office, not so much, and not so many. So far, so good. So another element which maybe a point which is rather difficult, and I think that Nora has something to say about this. So thank you very much for inviting me to this roundtable. So I active in non-life insurance, and so in non-life insurance we have the same service for all the customers, and so what makes a difference is the coverage. And what the clients choose for himself. And we try to diversify our products depending on the various targets we have, and we try to have a good relationship in terms of a good quality cost ratio. Now, how do we develop this? Then we have to look at the product, see the various warranties provided, the profitability of the various elements, and then we have to discuss about what is interesting for this kind of customer, but also what is interesting on our point of view, on the point of view of the insurer. How do you deal with these guarantees to guarantee with warranties or to guarantee profitability? And so what we try to do is sell a profitable product, but also at the same time not sell no-risk coverages. Now, how do you assess whether this product or premium is compliant with the customer's expectations? I'm not talking about profitability, maybe, but I mean, how do you measure the satisfaction or in terms of profitability? I mean, how do you balance the quality-price ratio? We have various views. I mean, in non-life, the SRP, the damage with regards to the premium, but also what we look at is the multi-equipment of the customer. For example, we need to see if he's really interested in a product, and this is very important. Thank you very much. Now we have a banker around the table, so we're going to jump into finance. So first of all, Maggie will broach the European policy in terms of cost, everything which deals with the central banks, financial projections, analysis, and see how this is involved. And maybe I would like to give the floor to Carlos, who will give an overview of the situation, and we give the floor to Frédéric, who is going to speak about the concrete aspect.
I think this is a very relevant question for all of us because it reminds us of something which should be obvious, which is that the context matters. So if 3 years ago you would be selling me a guaranteed product with a 2%, I would love it. This is great product, great value for money. If you come with that today, and I cross the street and I see that my bank is giving me a 3% for a deposit, then maybe the value proposition of that given product is not necessarily the same. And we have been living, let's be very honest, through a roller coaster. We have had a number of years with very low rates, and low rates, interestingly enough, have a significant impact on a number of things. First, on the product offering. I mean, with low rates, nobody wanted to offer guaranteed products, so there was clearly a push towards unit link. With low rates, we also saw something, and I'm sure that this is maybe a little bit controversial, which is that in the financial sector, and across, let's say, sectoral level, we saw a lot of banks that had strong insurance arms. Those banks in low rates had difficulties to, let's say, make the profit that the shareholders expected. So they became more and more reliant on the insurance part of the business, including through unit link. And at the end, if this is a business, which is, I would say, the other obvious thing that sometimes we all tend to forget, it is legitimate in a business to try to make money. The issue here is that in this complex environment, to make the same amount of money, in some cases you would need to increase the risk appetite that you would have in terms of conduct risk. And this is something that should not be underestimated. It's not something to be criminalized, but at least something on which all parties, and that includes manufacturers and distributors, should be made aware. Then the roller coaster led us to what? To a sharp increase of rates. And that has had implications. Again, on product offering, we see guarantees coming back. That doesn't mean that unit-linked and hybrids should go out. It is, let's say, product offering and supply, something that will always be in the benefit of policyholders. But we have also seen the consequences of competition, including, as I was mentioning before, with bank deposit. Only look south to Italy, and you have seen how mass lapses are becoming a massive issue for life insurance products. Why? Because the value proposition that was good 2, 3, 4 years ago may not be so today. And then there is another, I'm not going to call elephant in the room, but an obvious thing, which is inflation. And how does inflation affect value for money, and to what extent, let's say, in today's situation, and now I'm not only focusing on life, but also on non-life products, this has to be factored in. By the way, EIOPA issued yesterday a paper on inflation and insurance that I would advise you to read. But if you think on life, it clearly affects such elements as recommended holding period, break-even points, distribution of cost, etc., etc. So in other words, it goes straight to value for money, because some products that in a normal environment, not factoring in inflation, could be seen as offering a good value proposition, no longer will be seen or should be seen on that way. And what about non-life? And this is also an interesting challenge, because all costs go up, all the cost of everybody here in the room is going up. If we go too wild in terms of increasing prices, we take a risk that our clients will decide to go somewhere else. So how do we manage that manufacturers and distributors, and that's another challenging question, are able to align themselves in terms of, okay, this is reasonable, this is something that we can take, this is something that you can take, and we work together on that. Many challenges on something that seems to be so outside insurance, coming from a tower in Frankfurt, not a EIOPA one, but the ECB, and that at the end remind us of the importance of that context. Thank you.
Merci, merci. Bon, Frédéric, dans tout ce petit monde, il y a de la gestion, de la finance, des investissements.
Thank you. I mean, talking about management, finance, investment, and how do we manage all this? Well, it is a bit difficult because I'm not a manager. I'm in charge of the managing office, but I'm representative of a bank entity offering management counsel. And what might be so scholar in a way, I mean, when we speak about portfolio management, I mean, the objective is to beat inflation, because we can, of course, see this monetary illusion syndrome with nominal profitability, which are attractive, and with the policy holders, I mean, they want to have positive revenues. And so in this room, I mean, we have to identify the needs of our clients. So we speak about value for money, but in fact, I mean, what is the value the customers are giving to the risk, and how do they appreciate and how do they assess them? And so the question is also regarding the context. And I think they always have this question, that is to know how our customers are reacting, what are the stress factors, and what are their needs, and then and profitability expectations, and how do they assess the risk. And that's how we can develop a kind of portfolio. And Emmanuel spoke about the various products available among the insurance life products. We have also availability. We have support, and the undertaker, I mean, can vary, and US broker also can advise. And then there are some other products where we can bring more innovation and more risk. And we spoke about the private equity aspect as in introduction. I mean, Mr. Lau is talking about NJ, and I mean, these criteria have to be taken into account. And in life insurance, and these are key factors because we speak about long-term investment products. And of course, I mean, we may seize opportunities when allocating products, but it's we have to seize, I mean, these opportunities on the market and see the perspective with the structured product, possibility to have warranty capital on the various underlying products, the buy and hold product also through the bond sector, but also there's also innovations and taking into account also the societal stakes, which we mentioned already. But then we can do this through labelized funds on products which are listed or not on the stock exchange. And private equity is also people investing in infrastructures, in renewable energies, for example, as well as in businesses. And so there's a kind of wide spectrum of investments which is available through the contract. Now, the key point is with our customers, I mean, we have to identify their profile and also the risk level they are ready to accept. This takes place not only when they undertake they sign the contract, but also, I mean, this is a way we can make a portfolio evolve and also make a contract evolve. Well, we've been talking now for 2 hours now, so I think that we have to shorten the roundtable. I mean, Cédric, what is the situation regarding non-life insurance? How do we manage the flexibility of the products to adapt them to a changing world in terms of finance, but also regarding climatic change? Regarding a non-life product, I mean, for most of them have mechanisms that they evolve and they're allowed to adapt. So to take an example, you all know about that is the indexing of contract. And this index allow, with evolution of life cost, to adjust the value of estate being insured, and so mirrors the everyday life of the people. A second factor existing also is that in the insurance contract, in civil responsibility, in civil liability, we have these premium. I mean, every year we have N+1. We take the entirety of the elements to assess the premium the customer should have paid, and then we'll adapt the premium to his reality. And so these contracts are already equipped. Now, if we have contracts which are not equipped and we see that the needs differ, then we are going to review the product, and so we're going to build up a new product. Thank you. Nora, maybe would you like to add something regarding the same topic? Thank you. Well, yes, I would like to add the specificity of the non-life contracts. So for on a 1-year period, which means that we do not include as much inflation, and so it's not the same as with the life contracts. And so we use various mechanisms Cédric mentioned, but also, I mean, the management of the portfolio. If this is not enough, I mean, we increase the premium, but we have new tariffs also. And as Carlos was saying, I mean, it's always in agreement with all the people in charge in the businesses, in accordance, in agreement with people well aware of the situation of the market, etc. Now, but something else I would like to add to what's been said regarding non-life aspect. We have portfolios which are set up on the long term, which are on the long term risky as well. So in non-life, we have to look carefully at all the inflation curves evolving. So in non-life, we have a stable inflation. Everything is being well calculated, but now we really have to review all of a sudden the situation, and this has a lot of consequences on various products, professional products, etc. Next to the regulation also, which has to be taken into account, and so there are effects we didn't expect before. Thank you. Emmanuel, now regarding the life of the product, how do we know a product is going to last 5 years, 10 years, etc.? Well, in terms of life insurance, of course, that in life insurance we have life. It doesn't mean that we want to keep you for life, but I mean the interest is to stay on the long run, and on the long run because in the normal world, I mean the long-term placement bring more revenue than short-term placement. placement or so. I know that there are regulators, past ones, present ones, to remind us of the fact that you should not abuse of all this by increasing, exaggerating about the cost when you make the contract or when you leave the contract. We have to be careful about these practices, and these do not really exist in Luxembourg. Regarding the life horizon, Carlos' comment was quite interesting because today we find products, short-term products, and we have customers who are not well advised and who are going to leave a life insurance to go and buy a DAT, a 6-month DAT, for example. But all in all, it's a bad piece of advice because at that particular moment, you have to look at the challengeable products. We look at the horizon and the future, and we look at what happened a year ago on this same product, and then we look and anticipate on what's going to happen in 2 or 3 years. Then the end, the result, for this long-term placement will always be the best placement, and this is very important. What I wanted to say also is that the Luxembourg contract is really the envelope for the long term and suits very much the long term because we can do everything, and we can do and redesign, and maybe we can change the custodian bank, for example. We can change a broker sometimes at the loss or at the benefit of the broker. But the contract can accompany the need of the customers on the long term, very long term.
OK. Ça va, j'ai encore un petit peu de temps?
Do I have some time left? Yes, some time left. So let's go back to not maybe not the regulatory aspect, but with Silvia, maybe how do we make sure that the contract process, how do we make sure the insurer that every step is being carried out properly? We have to step back a little bit regarding the product design and about speaking for myself, actually, in a way. To me, one stage is very important in the designing of the product. We have to know the legislation which is applicable to the contract, and also the general interest standards of the country where the premium was undertaken, whether this law is different from the country chosen. So the part of the remuneration and inducements is the IDD part, which led to national transposition, which are quite different. Some people banned commissioning. Some other countries banned it for various products or under various conditions. Some other countries, there was a kind of a merging of the various inducement regimes, and some others just transpose the IDD, still bring transparency measures and obligation of information, more or less depending on the products. Now, what remains common to all is, at least for value for money, is a solid analysis of the tariff structure of the product, and this is part of the daily regulation. That is, when it is designed, you have to check that the tariffication of the product manages in a proper way interest conflicts or conflicts of interest, and make sure that this analysis is impartial without any business logic, and guarantee to the undertaker that the costs are not being doubled, that costs are not linked to some other services, and that all these products bring a fair return. The EIOPA clarified in what was mentioned before that the cost and return should be positive. And I think that this element was already encapsulated in the national regulation, Luxembourg regulation, so with the circular 2.1. Talking about the technical basis with very detailed costs. And I think I have to stop here because Nathalie is going to switch off the mic. Well, not at all, actually. I mean, we prepared this roundtable. I mean, we realized we could speak hours and hours on this, on what's being is already implemented and what should be implemented. So I think we are limited. I mean, well, we'll have a value for money second round next year, actually. Why not? And so, no microphone, sorry. So I wanted to devote some time to questions from the audience. And there is one question. Good afternoon. I wanted to deviate or reorient the debate to the danger regarding the remuneration and commercialization of policies, insurance policies. I mean, you all explained the value you add to your through your work to the product, but I think that the concept, when it is discussed by the regulator, is also a danger regarding the commissioning level, regarding recurring commissions. Now, is there a value in the recurring commissions? Also for life insurance, we see in the statistics of the CA that the greatest part of remunerations are outstandings and in life and recurring in non-life. And so maybe the regulator is looking for a way trying to work on the counterpart and return of the service granted for the customer. I'm not sure I understood what you said, but I tried to give you my answer, and then you tell me if I understood. Now, to me, the costs, the administration cost, that is recurring costs, and the challenge on the agenda, which is value for money, is a kind of exercise, a tedious exercise, but which, all in all, guarantees the insurer that he is well aware of everything which lies in the management of a contract regarding the operational side, but also wealth service, for example. But this is the part of the broker regarding the follow-up of the customer, the proximity to the customer, in order to see if his family or financial situation led to the evolution of his needs. Now, to me, it is a kind of exercise where we will highlight the added value of the contracts, because there is added value. The effort is only to identify it, because we've been commercializing for a while, but the services are developed, they are more accurate, they are more and more performing. But at least, I mean, I don't think that we should worry, because the exercise, I mean, we're already practicing this exercise. And in fact, what I understand from value for money, that is, everyone should be paid according to the job he has done and what he has brought at each level. So when we, for example, we developed the PRIPS, now we were kind of students or naive people, I don't know how I should call it, but in our PRIPS, I mean, we included the maximum costs, which are sometimes high, and so we had a situation which did not mirror the reality. And so when we compared this with the rest of Europe, and there were some exchanges at APCAL level, but then we realized that we were challenged by the European regulator, and that all in all, I mean, we were in line, actually, and even better than neighboring markets. So we had a added value of the Luxembourg products above the average. Je vais embêter tout le monde, non, je passe par là, pardon. J'aurais pas dû passer par là. Je vous prie de m'excuser. Merci Philippe.
Merci. C'est sur le même sujet.
About the same topic.
Sur la partie tarification,
For the pricing issue.
on a dans Retail Investment Strategy, je crois,
In
des
retail
benchmarks
investment strategies, I
européens
think we
qui vont
also
être
have
mis en place.
European benchmarks
Donc, on va
which are going to
retomber
be put in
exactement sur
place
ce qui s'est passé
and
pour
will
PRIPS, c'est-à-dire que
follow
les
up
produits luxembourgeois
on what happened for
complètement
PRIPS.
en
It's to
dehors
say that
du
Luxembourgish
benchmark européen
products
ou pas?
will be outside European benchmarks or not? What do you think?
Puis j'ai juste un autre
Who
point
wants to
qui viendra
answer?
après. Dans
Another
Retail Investment Strategy, est-ce qu'il n'y a pas un concept de vendre le produit
your
moins cher
strategy,
aux clients?
do you think you could think about selling the
Maybe on retail investor
product
strategy and
less
the idea of the
expensive?
benchmark, one of the points currently on discussion at political level is precisely what you are mentioning. Does it make sense to have a European benchmark? Do we need to get more granular? How many benchmarks will we end up having at the end? Who is going to be responsible? Is it going to be a EIOPA? And so on. This is an extremely valid question because sometimes we end up comparing apples with pears. So part of the pedagogical exercise here goes precisely into this direction. But if I may, and this is Natalie stealing 2 minutes, let's try to go back to the roots. Why they are coming with this concept of the benchmark? Fundamentally because they consider that costs have a fundamental effect on the value proposition. They focus a little bit less on the service, so what are you paying for, which I think is another important element. And secondly, they bring in the element of trust or lack of trust. We are talking retail investors, of these retail investors, and these being one of the drivers. They try to find what I have said it before. I think it's a shortcut, and it's not necessarily going to be the solution. But if you are not able to open up in terms of transparency, explanation, not trying to hide some of the cost, fees, and charges, that's probably the former regulator in me making the point, and so on and so forth, you will end up with this, even if it is substandard. In the same way that if you don't proactively address conflict of interest, which, let's be honest, sometimes exists, you will end up with a ban on inducements, even if we all here, I'm sure, will agree that this is a bad solution.
Bon, finalement, Philippe, enfin, selon moi,
finally,
encore une fois,
Philippe,
le cas de PRIPS,
in my
à la
opinion,
fin, le
the case
benchmark,
of
il est européen
PRIPS,
aujourd'hui, et
benchmark
si on fait
is
correctement les
European,
choses, donc ça sera
nonetheless.
peut-être nous,
And
pas
if we
nous,
do things correctly, it will be maybe
assureurs,
up to us,
professionnels
insurers,
de l'assurance
or
ici à Luxembourg,
professionals of
de
the
bien
insurance in
transposer ce
Luxembourg,
pack de directives
to
à venir
transpose this
pour être un
directive
petit peu moins
in the
naïf qu'on l'a
future,
été sur PRIPS, mais
to
en
be a
réalité,
little
dans la
bit
comparaison
more
des faits et
more
des coûts
intelligent
réels, je
and less
pense
naive
qu'on n'est pas
than
arrosé.
what we did in the past. But I think we do not have to be ashamed of anything. Thank you very much. I promise I will take this time out of my later intervention. For us, value for money is already embedded in the POC process. And it's the idea of IOPA, precisely. Let us not confuse the discussion about remuneration of an intermediary with the value for concept, which should be, in our mind, integrated in the POG. It's not up to us to evaluate, to assess this value for money of a product because we don't have the access to the information of the manufacturer. And what I can hear here is that the insurers are trying to take our place. No, manufacturers have to do their work, their job. We require cost compression. Why? Because Europe and our politicians, our countries, our economies need to reduce those costs because our social security is in bankrupt, our pension system goes bankrupt also, and Europe has to finance the transition to a green economy. So Europe needs investments. That's where the foot hurts. So value for money, in my mind, is completely different from part of the discussion we had. It should remain outside the concept of remuneration of the intermediary, of the broker, because we only represent 10% of these 90% of the costs. linked to a product. So it's time that politicians and supervisors to look at the 90 other % of these costs, because our value for money is extremely well regulated in IDD and in the MiFID. I'd like to turn to Carlos, who compares EWCs or councillors or advisors and us. Well, sorry to say that if you look at the range of rules applied on our intermediation, and I'm not speaking about our advisory section or our sales section, it's so much regulated that it also, in se per se, represents some kind of value for money. It's kind of different of the remuneration of advisors. Thank you.